The results of the Pakistan government's latest treasury bills or T-bills auction came as no surprise. There was no significant decline in cut-off yields, and investor interest was highest in the 12-month T-bills. So why are we even talking about this? Because the previous auction and the latest one indicated one important thing. The market is sure that Pakistan's central bank will cut the interest rate further and has already incorporated it. But before we get into that, let's get into what T-bills actually are. T-bills are short-term securities issued by the government and have tenures of 3 months, 6 months, and 12 months. They're one of the government's main tools for borrowing money and are considered to be low-risk investments since their profit payments are guaranteed by the government. In the previous auction held on August 21, investors' interest was so high that they submitted bids totaling 8 times the amount the government intended to raise. The majority of this was for the 12-month T-bills. This time too, 54% of the bidded amount was for 12-month T-bills. Investors had also offered lower bids in the previous auction. This was for a simple reason. They expected the State Bank of Pakistan to cut the interest rate further and consequently the cut-off yields, which is the highest amount the government is willing to pay, to also be slashed. This is also why there was almost no change in yesterday's auction since investors had already incorporated the expected cut in the previous one. Pakistan's interest rate is currently 19.5%. Meanwhile, its inflation has been easing consistently and fell into the single-digit range in August for the first time in 3 years. Consequently, analysts expect the State Bank of Pakistan to cut the interest rate by around 150 basis points in its meeting on September 12, resulting in lower yields for T-bills investors, and hence the large number of investors who were trying to lock in profits for longer periods in the auctions leading up to the State Bank's meeting. And it makes sense considering Pakistani banks and international agencies such as Fitch Ratings expect the interest rate to be slashed to 16% by December on the back of easing inflation.